6 figures. Still broke. That's most Americans. Retirement accounts full. Purpose account empty. Most people plan the money. Nobody plans the life. The wealthiest decade of your life? Often the most confused. 1 asset class. That's all most retirement plans contain. A 401k without a framework is just a number. Rich on paper, unprepared in every other way. Savings rate matters. So does savings purpose. Your net worth and your life worth are different math. The market can erase your balance, not your knowledge. Compounding works on skills. Compounding works on knowledge. Federal Reserve. 60% of Americans can't handle $400. 3 assets. Most plans only count the obvious one. Health is an asset. Most balance sheets never show it. Your skills rebuilt after a crash. A portfolio might not. The safest retirement asset isn't an ETF. It's knowledge. Strong relationships have actual financial value. Science confirms it. You can't outsource purpose to a financial planner. Retiring rich and dying alone. It happens more than you think. VOO and VTI won't tell you what makes your life worth living. Planning for income replacement, missing the identity replacement. Mortality changes your math. Always plan like it will. Social Security replaces 40%. You need the rest. Inflation erodes cash. Knowledge and purpose don't erode. Most people are building wealth toward a destination they've never defined. Your values are the roadmap. Your portfolio is just the fuel. BLS data. Americans spend more on entertainment than retirement. A retirement without purpose is just expensive boredom. Skills compound quietly over decades. Then they explode in value. Plant seeds in all 3 columns, not just one. Automation saves money. Values determine what you save it for. The Vanguard millionaire next door doesn't look like you think. Intellectual assets survive every market downturn. Financial assets don't. Family is a financial asset. It reduces your risk exposure. The average American retires at 62. SSA says most aren't ready. Spending without intention destroys wealth silently, invisibly. Experiences are an asset. They return dividends you can't quantify. Your 401k is a tool. Your purpose is the plan. High income, low savings rate. That combination always loses. Wealth without wisdom is just money waiting to disappear. IRS gives you tax-advantaged accounts. Most people underuse them. Character compounds. It is the longest duration asset you own. Traditions are passed down. So is financial behavior. Faith, values, generosity, these belong on your balance sheet too. 3 columns. 1 system. The actual math is next, and it changes everything. Let's build the complete family balance sheet from scratch right now. Column 1. Financial assets. Your 401k, IRAs, stocks, real estate, and cash. Vanguard data. VOO averaged 10.5% annually over 30 years. That compounds dramatically. $1,000 a month in VTI from age 30 reaches over $2M by 67. Max your Roth IRA first. $7,000 a year, tax-free growth forever. Financial assets are essential, but they are the most vulnerable column. Column 2, intellectual assets. Knowledge, skills, unique abilities, experience. Your skills are an income engine. They never appear on a brokerage statement. Your income is not your wealth. Your savings rate and knowledge base are. Intellectual assets are seeds you planted years ago, now bearing fruit. Reading 1 financial book per month changes your trajectory in under 3 years. Your unique abilities are what the market will always pay a premium for. ETFs diversify your portfolio. Skills diversify your income streams. Traditions are intellectual assets passed to the next generation without a tax bill. SCHD dividend stocks pair perfectly with an intellectual dividend of new skills annually. Ideas generate income. Your best ideas haven't been monetized yet. The best investment account isn't highest return. It's the one you actually fund. Morningstar confirms, consistent investors outperform market timers by 3% annually. Automate your 401k contribution at every salary increase. Non-negotiable. Column 3, human assets, family, values, faith, health, relationships, character. Human assets don't appear on any financial statement. That's precisely the problem. Health is a compound asset. Its returns grow invisibly until they don't. Mentoring is a human asset with a quantifiable return on investment. Generosity is a wealth strategy. Research shows it correlates with net worth growth. Your personal values are not soft data. They are the most durable asset you hold. Relationships reduce costs. They also reduce risk. The Federal Reserve confirms this. Diversification is not owning more. It is owning less of the wrong things. QQQ for growth, VOO for stability, bonds for defense. That's the three-fund logic. Faith communities provide social capital with a measurable economic protective effect. Retirement is not an age. It is the alignment of your three asset columns. A 5-minute values audit every year is the most valuable financial review you can do. The three-fund portfolio mirrors the three-asset framework, simple by design. Character is the longest duration holding on any balance sheet. It never depreciates. Cook at home, drive a used car, invest the spread, simple wealth arbitrage. The three columns are clear, but the critical question nobody asks that's next, and it changes the entire plan. Here's the critical exercise. If you lost your financial column entirely, what rebuilds it? Your skills and knowledge are the engine that regenerates financial capital after loss. 2008 wiped out trillions. Those with intellectual assets rebuilt fastest. Compound interest is not a math concept. It is a boulder rolling downhill, unstoppable. The boulder starts slow. The first decade of compound interest feels like nothing. Then decade 2 hits. The numbers shift from thousands to hundreds of thousands. 500 a month at age 25 becomes over 1 million by age 65. At 10%, starting at 35 with 1,000 per month reaches far less than half that total. Time is the only compound variable you cannot buy back. Start before you're ready. The intellectual asset boulder rolls the same way. Skills accumulate and compound silently. Fidelity data. Accounts left untouched for 15 years outperform actively managed ones. Your 401k match is an instant 50-100% return. Never leave it on the table. Human assets are the most crisis-resistant column on the entire balance sheet. A three-fund index strategy, VOO for U.S. market, VTI for total market, SCHD for income. Rebalance annually, not monthly. Overmanagement erodes returns consistently. The best retirement plan is the one grounded in what you actually value most. If you lost everything tomorrow, what would you use to rebuild? Answer that honestly. SSA data. Average monthly Social Security benefit is only $1,907 in 2024. The gap between Social Security and real expenses, that gap is your investment mandate. Cancel unused subscriptions. Cook at home. Negotiate rent. These are strategic reallocations. Saving 15% of income is the Vanguard recommended threshold for long-term security. Human capital depreciates if neglected. Invest in health, relationships, and learning deliberately. Morningstar. Low-cost index funds beat 80% of actively managed funds over 20 years. A 10-year-old car you own beats a new car payment every single month. Always. The three boulders, financial, intellectual, human, all roll together or none rolls at all. IRS limits, 23,500 inches of 401k for 2025. Catch up at 50, add 7,500 more. Every dollar in a Roth IRA grows completely tax-free. That differential is enormous over decades. Most people prioritize looking wealthy. Wealthy people prioritize being wealthy. Different strategy entirely. Values-based planning produces more confident, purposeful, and fulfilled retirees. Every study says so. You now have the 3 columns. The full system is coming right now, and it starts with one question you must answer. The defining question is, if you had to give up one column forever, which one would you keep and why? Almost everyone keeps human assets, family, health, values. No one trades their children for a portfolio. That instinct is data. It tells you exactly where to anchor your retirement plan and why. Over 60% of six-figure earners live paycheck to paycheck. The problem is never income alone. This is the behavioral gap. People who earn more often save a lower percentage of their income. Values-anchored budgeting solves the behavioral gap. You spend aligned with what you actually care about. Remember the boulder? With values as the hill, it gains momentum from day 1, not year 10. Step 1 of the actionable system. Write down your top 5 personal values, not financial goals values. Step 2. Create your full family balance sheet. 3 columns: financial, intellectual, human inventory, everything. Step 3. Identify the gaps. Which column is weakest relative to the life you want to live? Step 4. Fund the financial column systematically. Automate VOO or VTI on payday every month, always. Vanguard research: investors who automate contributions retire with 40% more than those who don't. Step 5. Grow your intellectual column intentionally. 1 book, 1 course, 1 new skill per quarter minimum. Step 6. Invest deliberately in your human column. Relationships, health, and character require consistent deposits. The 3-fund portfolio is the financial spine of this system. VOO, VTI, SCHD, low cost, diversified, proven. The expense ratio gap between active funds and index funds costs the average investor $300,000 lifetime. A Roth IRA funded from 30 to 67 with $7,000 annually compounds to over $2 8M at historical rates. Stealth wealth is not a lifestyle choice. It is a mathematical advantage hiding in plain sight. Every dollar not spent on status is a dollar compounding in the market. That math is brutal and beautiful. The person with the $1 million portfolio and the 10-year-old Toyota has solved the entire equation. BLS data. The average American household spends $12,000 per year on transportation. That is wealth destruction. The behavioral audit question: does this spending decision strengthen or weaken one of my 3 columns? Investing in education for your children is a human and intellectual asset in a single transaction. Negotiating your salary once is worth more than a year of daily investing. Do it annually without fail. Health costs in retirement average $315,000 per couple, according to Fidelity. Your health is a financial decision. A strong community of mentors, advisors, and peers is a risk management tool disguised as relationships. The 3-column approach transforms retirement from a number into a complete life architecture. The financial column number you need is 25 times your annual expenses. That is your target. The 4% withdrawal rule from the Trinity study means your portfolio sustains 30-plus years of withdrawals. The 3 boulders, once aligned with your values as the slope, become unstoppable together. The intellectual column protects you when markets fall because your income is not entirely portfolio dependent. The human column protects you emotionally and physically, 2 dimensions that directly determine portfolio behavior. The complete system in 1 sentence: automate financial investments, compound intellectual assets, and protect human ones. The annual review ritual: rebalance portfolio, update balance sheet, all 3 columns, review values alignment. The power of low fees: reducing expense ratio from 1% to 0.05% saves over $200,000 across a 30-year portfolio. Practical Week 1 action: open a Roth IRA, contribute any amount, invest in VOO or VTI immediately. Practical Week 2 action: complete your family balance sheet, all 3 columns with honest inventory. Practical Week 3: identify your weakest column and commit to 1 concrete investment in it this month. Practical Week 4: automate savings, set up 401k contribution increase. Put the financial column on autopilot. The most confident retirees aren't the ones with the biggest portfolios. They know exactly what their life is for. A joyful retirement requires all three columns: financial security, intellectual engagement, and deep human connection. Morningstar confirms low-cost index investors with clear goals achieve retirement outcomes 60% more frequently. The simplest wealth system in 3 lines. Spend less than you earn, invest the difference, build all 3 columns. The IRS gives you 4 tax-advantaged retirement vehicles: 401k, Roth IRA, HSA, and 520